even with the volatility in the spot markets, in the physical markets, like the Shanghai Gold Exchange, you're still seeing premiums. And that's proving that demand has exceeded supply. And sure, because there's a finite amount of this. But again, I'm going to say, do central banks and governments want you in something that's outside of their grasp? So we have a choice here. But to me, this makes both gold and silver not just invaluable, but more valuable even to the central banks and the governments, because that's who's going to determine who is really the next leader in this financial fight that we're in right now. It's why you see countries like China and Russia and India, the BRICS nations, accumulating as much gold as they possibly can, and even silver as a strategic asset. Number one, what I make of it is those are spot markets. They are not the actual physical users of gold and silver. So with everything, all of the money that's been pushed into the system, the pricing on everything and the volatility everywhere is on the movement of the money from one area to another area. Because all of that money printing that the central banks have been doing, it's not like it evaporates after they print it. It's got to go someplace. So it is the flow of funds that are determining the ups and the downs. That's one thing. Now, another thing is gold is a savings instrument. And so when you're looking at the movement in both gold and silver, has that role changed in 8 weeks? No, it's still the same role that it's had forever, because there are 33 different, and there could be more that I could count, different users of physical gold on a global level, and 36 different users of silver on a global level. Did those users of the physical metals evaporate? No, they did not. But the Wall Street traders, the bank traders have moved from one asset into the next asset. And, so you're seeing us in the middle of a war in many places in the world, by the way. And yet you're seeing the only true safe haven asset, because physical gold, physical silver in your possession runs no counterparty risk. Everything else is counterparty risk. So gold is really, and silver too, continue to perform their function, but particularly gold as a savings vehicle. I mean, if I get into fiscal problems, because I have a staff that I have to pay, this is my savings. I will liquidate this to make sure that I can ensure paying their salaries, etc. This I don't liquidate because this is my wealth preservation. That's a slabbed coin. But this raw piece of bullion, this is actually not bullion, it's a pre-33 coin, but it's just a raw piece of gold. This is my savings. And if I get into trouble, I have something to fall back on. Actually, what I'm seeing, and it's never just in one area. So if you're looking at what's happening in the gold market, you have to look at what's happening everywhere else as well, and to kind of weed through and see the truth of it. Because again, you're talking about it being a liquidity provider. If somebody needs cash, they have to sell, they have to liquidate whatever the markets will bear. But at the same time, gold and silver were getting an awful lot of attention and a big movement in that direction. Do governments, do central banks want you, the public, the individual, to actually hold your wealth outside of the system? No, they don't. They need your wealth in those intangible assets because it's much easier to trick you and to transfer your wealth away. So there's a number of reasons, but Kai, I think this is like a really important point that I want to bring up, because it was January, and this trend has not finished yet. It was January of 2025 when we first started the movement toward the physical markets dictating price. So even with the volatility in the spot markets, in the physical markets, like the Shanghai Gold Exchange, you're still seeing premiums. And that's proving that demand has exceeded supply. And sure, because there's a finite amount of this. But again, I'm going to say, do central banks and governments want you in something that's outside of their grasp? Silver, I think, was something like 77 or 80% above the 200-day moving average. Now, for those that don't understand it, the 200-day moving average means that every day they total up where spot gold or spot silver closes. And they do that for 200 days. They divide by 200, and it gives you an average. But that kind of acts like a rudder on a boat. And if the spot price is a water skier, there's only so far above or below that it can go before it's coming back to center, right? So 10% technically is considered a lot. So silver, I think, was at about 77%. So if 10% is a lot, what's 77%? And it's still, the last time I checked, it might be a little bit closer now. But last week, I think Friday, I checked and it was still at something like 32 or 34% above. So it's still overbought, not overvalued, overbought technically. And gold was in a similar spot. Gold contracts were in a similar circumstance. I think they were like maybe 48% or 54% above that 200-day moving average. So all they are really doing, and if you go back and look at a long-term chart, you'll see this over and over and over again, where the traders push the price up too quickly, and then spot gold, spot silver contracts stay within a range, giving that 200-day moving average an opportunity to catch up. So yes, what that does, to your point, Kai, is it builds a really strong foundation for those spot contract markets. But what recently happened with the UAE leaving the OPEC and OPEC Plus is another notch into that shift that started in January of 2025, taking us from the paper markets dictating price to supply and demand markets dictating price. We aren't there yet, but by the UAE breaking off from OPEC and OPEC Plus, that goes to confidence in each other, right? But it also goes to the constraints that the UAE felt that they were under, and that oil should be priced much higher, because where oil and gold and silver are compatible, where they really align, is there's a finite amount of all of it. Well, the big shift is that those countries that formed that cartel that basically had almost a chokehold on having the ability to price the oil in the global markets, well, that's now broken. It's now shifted. Just like in January 2025, when we started, or when Europe started shipping over physical gold and physical silver. Anytime there is a major pattern break, it is an indication that wherever we are in this trend cycle, we have evolved beyond that. The system that we've grown up in, that we are trying to figure out, it's dying. It's an aging system, and the system is falling apart because what it really is a big lie. And what all of these moves are indicating is that it's time for the truth. Just kind of the same way that affordability sort of matters now. Yes, affordability sort of matters. And so does supply and demand. I mean, you tell me how we can have negative rates on energy. Did the market for the entities that use energy, did it evaporate and actually go negative? Right? Exactly my point. And so I think that because of where we are in the whole trend cycle, the system is breaking down. It didn't start today. It's not going to be finished today. This started a while ago, and it's not over yet. So you take advantage of what you can get your hands on, right? If you can buy if you can buy real gold cheaper, buy it. Just because the spot market is moving, that's not an indication of true valuation. That's just an indication of markets, that the movement of money sloshing through this or through that. So we just recently had, we kept kissing that lowest confidence level, but like 2 weeks ago ish, we broke through for public confidence to be at the lowest level since tracking began in 1952. It is all really an indication. Like, I talk about life cycles. Well, most people know you're not going to look at me and go, oh, she must be a newborn baby, right? You're not going to look at my 11-year-old granddaughter and go, oh, I think she might be 72 this year. It's because we have learned how to identify where the human life cycle is, or where it is in our animals, our puppies. But understand that the same thing is true with financial systems. And so it always starts out solid with commodities and commodity money like gold and silver that had use and continues to have use way beyond the financial sector. But keeping in mind that because it's physical, there's a finite amount of it. And for governments and for central banks, what gold really does is it forces fiscal responsibility, which is not something governments or central banks really want to take in. They want to call all the shots. So first, we start out with commodity money. And then because, it's so important to grow these markets, we end up getting crap like this back in the system. And then they start to regulate and take the gold and the silver. They didn't completely take it out of the system. They'd love to, but they put it on a back burner where it was just them, not the public, that could have it. It's a full cycle moment, because once governments and central banks have full money monopoly, which they have since 1971, then they get to devalue the currency at will, and interest rates and money printing is the tool that they use to do it. And then we get to a point, which is where we are right now, where there's so little value in the currency and the prices are rising noticeably higher that the public loses confidence in the system. And that just happened, right? But that's also what's happening with the petrodollar. I mean, the petrodollar, frankly, that's been dead for a while. As soon as you could buy oil with different currencies, that was gone. All right, maybe they're still using more dollars to do it. But these things don't happen like this. They happen slowly at first, then they happen very rapidly. So where we are is at the end cycle of this game. And I would tell you that the most significant thing that has happened for me since 2022, when the central banks gave up their forward guidance and the markets lost confidence in the central bankers, is that public loss of confidence, because that's the only thing holding this together, period. End of discussion. And that's gone now. Doesn't mean that it happens overnight that we see the result of it, but that's the whole point. You recognize where we are in the cycle. That enables you to get into a position, not just to weather the storm, but what a concept, actually benefit from it. If you think about it, what are governments and central banks constantly testing? Consumer confidence, sentiment, inflation expectations. It's those expectations and the confidence that is holding this all together. So when the consumer or the public loses confidence, then you have a rise in protests and you have the distrust of the governments. So if they say, well, this is going to fix the system, nobody believes them, right? And they lose their power. Coming together, think about it, Kai. You got 1% that's ruling the 99%. You don't need the 99% to get it. You need 3%. That's all you need to see what's happening and understand before you have a revolution. And so that is what I see lying in our future. But I do see the hyperinflationary depression, because for some people, we're already in a depression. Well, I think that on a governmental level, the central banks and the governments will continue to hold gold because CBDCs, that this would just be a temporary stopgap. I know they want that permanently, and if we don't do anything, well, then we're going into slavery. What will that do to gold and silver? It'll make it more valuable, actually, because what you're looking at here is freedom. How valuable is that freedom? Exactly. We have a choice to make at this point in time. We can allow the continuation. And if you do nothing, then you're basically voting with your wallet and voting to allow them to take even more of your freedoms, more of your rights, and more of your wealth. You are actually agreeing to work for less and less and less, and you're basically working for nothing. So we have a choice here. But to me, this makes both gold and silver not just invaluable, but more valuable even to the central banks and the governments, because that's who's going to determine who is really the next leader in this financial fight that we're in right now. It's why you see countries like China and Russia and India, the BRICS nations, accumulating as much gold as they possibly can, and even silver as a strategic asset, right? So we're watching this massive shift in power, but the power is going to those countries that are accumulating the gold and silver, even by issuing the CBDCs. That's really about controlling the public. But gold and silver prevents their ability to completely control you. And having independence, in other words, having surety in food, water, energy, security, barterability, wealth preservation, community, and shelter, having all of those things firmly around you ensures your freedom as well, with the foundation in sound money, gold and silver. Because if the government says jump, but you've got your needs met, you can go, nah, not gonna. If you don't, and you're dependent upon them, which is a big part of this, make people more and more dependent on the government, they take more and more power. Well, I hate to say it, but if we don't fight back, I don't really want to say that we deserve what we get, because it's not for us to say what the future generations deserve. Personally, I think that they deserve a better place than the way we found it. People in my generation, your generation, the ones that are coming up, the little ones, they can't fight this battle. We have to fight this battle for them. So yeah, what's the value of gold and silver? And what's the value of freedom? A lot of people give it away so easily. Don't give it away. Why would you?